Hi, everybody. We have Tony Weedle with us again. Tony is an independent insurance agent out of Canton. And in this segment, we're going to talk about automobile coverage and life insurance. Go ahead, Tony.
All right. Well, thanks for having me back. We're going to talk about those two topics, and just a quick review from the homeowner's policy. We said that motor vehicles were excluded. When we looked at the list of exclusions in the policy, we saw that liability and property damage associated with motorized vehicles is excluded under the homeowner's policy. And that's because we need to buy an auto policy. So as we look here, I'm going to go ahead and pull up a declarations page. Again, the first few pages of your insurance policy. And we're going to review the coverages that you would find on an auto insurance policy. Again, at the top, you're going to see things very similar all the time. This particular one we're going to look at is Nationwide Insurance. The customer's name would be listed in their policy information, as well as their policy effective dates and expiration dates. And then on an auto insurance policy, what we'll find is we will find a list of vehicles. We're only going to look at one of this person's vehicles. They actually have four. But vehicle number 3, they purchased a 2019 Chevrolet Suburban, and they needed to get coverage on that. And so we went ahead and we added it to the policy. And I think what we'll do, similar to what we did with the home stuff, is we're just going to walk through the coverages here, and we're going to talk about what each of them means. So typically in auto insurance, what people are most concerned about is I just went and bought a 2019 Chevrolet Suburban, and I need to make sure that I have comprehensive and collision coverage on it because my bank is requiring it, or because it's a $50,000 vehicle, and if I wreck it or somebody wrecks into me and they don't have insurance, I want to make sure that I don't lose my $50,000 investment. And so there's two categories that you can buy. We call it other than collision is the technical term, or comprehensive coverage. And this is for things like wind, hail, fire, lightning, acts of God, if you will. In addition, if you were to hit a deer on the road, hitting a deer sounds like collision, but it actually falls underneath the comprehensive bucket. And so the insurance company would pay to fix and repair your vehicle, and they would pay everything except for your $500 deductible. $500 deductibles is what I'm seeing pretty common here in the marketplace today. Some people like lower deductibles, $250, for example. And then I have quite a few people that are carrying $1,000 deductibles. The deductible is going to be a key driver of your insurance in terms of what you're paying price-wise. And so oftentimes in this area where I sell insurance, the comprehensive premium is typically higher than the collision premium that we'll talk about in a minute. And so often I'll sell an insurance policy with $1,000 comprehensive deductible and a $500 collision deductible, just in order to save premium. But the insurance company is going to take care of you. And if for some reason you were to have rolled your new 2019 Chevrolet Suburban and really wrecked it upright, then they would total the vehicle out and they wouldn't repair it. They would just write you a check and just take $500 off of that for you. Collision is just what it sounds. If I'm running into another vehicle, a building, anything that I'm colliding with except for deer, really, then that is the collision coverage. And again, this is for your automobile, and in this case, we have a $500 deductible applied. So we've talked about covering your own vehicle. Now we want to talk about what happens if you cause an accident. You are found to be at fault in an accident. What type of response will your auto insurance policy provide to fix the damages, to fix the injuries of the person that you hit? The first bucket that's listed here is property damage. This is for property damage to others. In this particular case, this customer is carrying a limit of $250,000. I probably provided a bad example here because typically what I see in the marketplace would be $100,000. But I've talked with this customer and we've increased their limit to $250,000. Again, this is going to cover the person's vehicle that you hit. This is going to cover, so for example, let me just step back. For example, you're driving your 2019 Chevy Suburban and you're in an accident with a 2021 Cadillac Escalade Platinum Edition. And it is $110,000 new on the lot, and you totaled that person's Cadillac Escalade, brand new. Well, because it's $110,000 to replace it, you have a $250,000 limit. You're in good shape. We have enough coverage. The insurance company is going to get their vehicle fixed. However, if you would have only carried a $100,000 limit, like I said was most common in the marketplace today, then your insurance company would have paid $100,000, but the additional $10,000 would come from out of your pocket because you would have ran out of limit. People typically say, when I try to upsell them limits, they say, oh, 100,000 is plenty. But I use the Cadillac Escalade as an example. Vehicles are getting more and more expensive. The other example I use is if you are in an accident on the interstate that causes a 18-wheeler to swerve and miss you and go through the ditch and causes damage to an 18-wheeler, certainly that's going to be quite expensive. If you were to have an accident and wreck street signs, wreck fences, wreck into somebody's home, whatever the case may be, all of the property damage that you caused is covered, subject to the limit here of $250,000. So that is property damage of others. Now that we've got the other person's property taken care of, what happens if they are injured? And so bodily injury is the next category we talk about. In this particular case, and these are in thousands, we have $250,000 of coverage per person hurt in an accident, up to $500,000 for the accident. So if somebody goes, let's just say two people were in the Cadillac Escalade that we wrecked, they had to both be taken to the hospital, we would be able to pay for their injuries up to $250,000 per person, again, up to $500,000 per accident. So we would have enough coverage there. Let's say the driver was really, really badly injured and their medical expenses were $400,000, but the passenger, they were not as badly injured, but their medical expenses were $100,000. Well, you would think that, hey, I've got enough limit here. I have $500,000 of coverage and my insurance would respond. Well, that's not entirely true because we have this sub limit of $250,000. So for the passenger who had $100,000, we'll cover that no problem because that's under the $250,000. But the driver who had $400,000 worth of injuries, your insurance policy would pay $250,000, but the additional $150,000 would be on you to take care of. So people ask me all the time, well, what kind of limits should I carry? And as the insurance agent, my typical response is, well, how much can you afford? But we want to buy liability protection as high as we can, and it is the least expensive part of the auto insurance policy. Now, let me give a disclaimer. If you are a 15-year-old or 16-year-old male driver, it is not the cheapest part of your insurance policy. Your age and your gender will drive up the liability rates. But this is a college class, and assuming many of you are starting to get into your 20s, that's when the liability charges start to decrease for you. And the most expensive part of the policy that you'll be seeing moving forward will be the physical damage coverage to your automobile. So now that we have covered the other person's injuries and the other person's property damage, in Kansas, and this is a Kansas specific law, so I won't dwell on it too much. In Kansas, we have a no-fault law that says you're responsible for your own injuries in an accident up to a certain point. And this person, it's up to $8,500. But in this particular case, this customer's chosen to buy up additional coverage. Again, I'm not going to talk about it a lot, but basically you'll pay for your first $8,000 worth of injuries, and then the other person, if they cause an accident to you, they cover your injuries above that. Uninsured motorist bodily injury coverage. Sometimes it's called underinsured or uninsured. It's really the same thing. In Kansas, the minimum liability limits are $25,000 per person hurt, $50,000 per accident, and $10,000 of property damage. Okay. Well, if I'm driving, I drive a 2008 Ford F-150 pickup truck, and it's a $12,000 truck. Well, if somebody's carrying minimum auto liability limits and they wreck into me, they've only got $10,000 of coverage. And so my insurance policy would come in and give an additional $2,000 worth of support to get my vehicle fixed. Or I was really badly hurt in a car accident, and I was in the hospital for a month, and the person that hit me that was at fault only had the minimum auto liability limits in Kansas of $25,000. Well, my vehicle insurance policy would help pick up my additional bodily injury claims. So this is for people that are driving around either without insurance or without enough insurance. In Kansas, 70% of people carry at least the minimum limits or higher, but 30% of people out driving on the road in Kansas do not have insurance. So it is kind of a scary number when you think about it, that 30% of the people, or 3 out of every 10 cars you see, likely do not have automobile insurance. This is typically something that every insurance agent will include for you, but it's something you want to make sure is on your policy. Moving on down the list, rental reimbursement. This is a policy here, or an endorsement here, that gives you a rental vehicle while your car is being repaired. And so this particular one is $30 per day for 30 days, or a total of $900 of coverage. I've been selling this a little bit higher, especially with people with larger vehicles. It looks like I need to do a better job here. But you can buy $40 a day for $1,200, or even $50 a day. And so you got to look at what the rental rates are doing in your area, and make sure if you've got a family of 5 or 6 and you're going to need a van or a Suburban as a replacement vehicle for a week, you want to make sure you have enough rental reimbursement coverage to rent the kind of vehicle that you're going to need for your family. This policy comes standard: custom equipment, $3,000. This is going to be the things that are physically mounted to your vehicle. It could be a grill guard on the front of the vehicle. It could be something that you've permanently set up inside. This really comes into effect more for, I think, of somebody with a disability who has a van that's been converted to, load their wheelchair and everything. And of course, the $3,000 wouldn't be enough for that particular case. But you can add custom equipment coverage to make sure you're covering all of the stuff on your vehicle. I also see this a lot with like farmers who have flatbed, bale bed trucks to feed cattle with. We would add a special line item to cover their bale bed. Gap coverage. It's not applicable here because we didn't select the endorsement, but gap coverage would be if you bought this new Chevrolet Suburban for $50,000 and you took a loan for the full amount, and a year later you still owed $45,000, but the Suburban is now only worth $42,000. So there's a $3,000 difference. This gap coverage would pay off your loan, would pay the additional $3,000. So that way, at least you wouldn't owe any more money on the vehicle that just got wrecked or totaled. And the new car replacement, this is an enhancement that Nationwide offers, many companies offer. And that's typically if the vehicle is wrecked within the first 12 months of ownership. It applies to new cars only. This person bought this vehicle 1 year old, but if they would have bought this one brand new, then this coverage would apply. And basically it says for the first 12 months, if you wreck or total this vehicle, we will replace it. We will not pay a depreciated value. And so that's an important endorsement for people that are buying brand new vehicles. I failed to mention up top here, when we were talking about homeowners insurance, we talked that we can get a replacement cost coverage or we can get a depreciated actual cash value coverage. In auto insurance, we don't get that choice typically. I don't want to say all the time, but typically. In auto insurance, it's most of the time it is the actual cash value or depreciated value. So that's what we would find up here. And that's why this new car replacement for the first 12 months is kind of a neat enhancement, because we are paying replacement cost coverage, but only for the first 12 months you own the vehicle. Policy coverages. I like how Nationwide lays this out here, just because I wanted to show you some of the TV ads that you see on TV about accident forgiveness, minor violation forgiveness, vanishing deductible, total loss deductible waiver. You see these little gimmicks that are being talked about on TV. And in this case, this particular person has opted to have accident forgiveness and minor violation forgiveness on their policy. They didn't choose the next two down. But these cost you money. These are not free. These are not things that the insurance company is trying to do to help you out. They're charging you, basically pre-charging you for an accident you may have in the future, and they're pre-charging you for a speeding ticket that you might get in the future. And so, and for vanishing deductible, they're basically just pre-charging you for the deductible in the event you have a claim. And so if I would have had the premiums lined out here, you would see a premium associated with each item that they chose to include. So why those gimmicks, I call them gimmicks, why those enhancements they would like for me to tell you are unique and interesting, they are also expensive. So if you're sitting down in an insurance agent's office and they're saying, hey, I've got all these great bells and whistles, a good question to ask is, well, what happens if I don't take these bells and whistles? What will that do to my premium? And I can promise you that if you don't take these items, your premium will be less. So that's just something for you to know. Insurance companies are in the business of making money, so they're not going to forgive anything without charging you a little something for it, okay? Last but not least on this page, roadside assistance coverage. This is pretty common in the marketplace. And it's very cheap. If you don't have AAA or you don't have another towing service that you subscribe to, typically your auto insurance company will provide something. They have roadside assistance plus at Nationwide. It provides towing for up to 100 miles. They will also change your tire, bring you 5 gallons of gas if you run out of gas, and it's only $21 a year. So it's very cheap insurance, and I'll typically add that on almost all policies. And then last but not least, this particular Chevrolet Suburban has a lien holder. So they financed it through Wells Fargo. And so we would have to list the lien holder on the policy. And of course, if they were to have an accident, the check would be written to both the lien holder, Wells Fargo, as well as my customer. So that is auto insurance in a nutshell. Like we talked about in home insurance, several factors affect the price of insurance, car insurance specifically. Number one, again, is going to be your insurance score or your credit score. So that's going to be a big determining factor. We've talked about it already, your age, gender. If I was in the classroom, I usually get a pretty big laugh out of this. I'll ask a lady in the class if she's ever seen a boy do something stupid, and she'll tell me absolutely 100%, and they'll all laugh, but it's true. Boys do dumber things than girls do, and so boys will pay higher insurance premiums than girls. Typically, a teenage boy will take mom and dad's Chevrolet Suburban out on a dirt road, drive it at 90 miles an hour, and they'll flip it over 4 times and total it. While the girl in the family will take the same Chevy Suburban and go to Walmart and will slowly back into somebody because she was paying more attention to her hair or makeup or on her phone or whatever the case may be. And so typically for girls, the accidents are much more minor and not near as severe. And so girls pay less for insurance than boys. Your claim history, your driving record, how many speeding tickets or accidents you have, your criminal history will make an impact. And you say, well, criminal history, well, that sounds weird. Well, think about DUI, A DUI would be a criminal offense, and a DUI will definitely affect your insurance. We talked about the liability limits as well as your deductibles. So those are going to make a big difference. There are discounts for good student, accident prevention course. And then if you're using this vehicle for business pursuits, say you're doing a ride share or a food delivery service like Uber, for example, or the food one is not coming to my mind off the top of my head, but we don't have any food delivery service in Canton. So as you can tell, I don't use that very much, but those will all affect your insurance. Lastly, the type of vehicle we're covering is going to affect your insurance as well. If I'm insuring a brand new Chevrolet Corvette that can go 200 miles an hour, it is going to be significantly more expensive than a 2019 Chevy Suburban because of the vehicle horsepower, but also because the new Corvette's probably going to be $100,000, whereas Chevy Suburban might only be $50,000. So those are the types of things that would affect your rates. What did I miss?
I don't think you missed anything on auto.
Okay. All right.
Watching the clock.
Yeah, I think we've got about 5 minutes here. And so let's just switch. Let's talk about life insurance real quick, if that works for you.
Yep.
Life insurance is the simplest kind of insurance that I sell because there's only one, what we call peril, or one type of claim that we're going to pay. And that's if a person dies. So death is what I'm insuring against. Nobody likes to talk about that, but that's what we're covering. And so when we think about life insurance, and let's see here, did this scenario pull up on the screen?
No, it did, yes.
Okay, perfect. When we talk about life insurance is never, it is always as cheap as it's ever going to be right now today, because tomorrow you're a day older and it gets more expensive. So, life insurance is something that you want to consider and think about, even as a college student or leaving college, to cover all kinds of expenses. It could be to cover your funeral expenses. It could be to cover any debt that you might have. And then even above and beyond that, some people like to have income replacement coverage. For example, in my home, I work and my wife stays home. And by the way, she works, so let's be clear about that. And she works much harder than I do, but she's not getting paid for that. Well, if something were to happen to me and I were to pass away, she would have to get a job or need to have some type of income stream. Well, life insurance is a way that we can provide her some resources. Also with my kids, maybe I'm thinking about, hey, I want to have a life insurance policy in case I were to pass away. I want to be able to send my kid to college and pay their tuition. So there's a lot of reasons people buy life insurance. And there are numerous different kinds of life insurance you can buy. I want to talk about two of them here, and because I think they're the most applicable for you. One of them is whole life insurance. Okay, whole life insurance means just what it means. I'm going to have insurance in this particular case to age 121. So and people don't live to be 121, so it's whole life insurance. So this policy, this $50,000 of death benefit that I've selected here, will get paid out at some point in time. Hopefully later rather than sooner, right? And for this, it's going to cost you $11 a month. $11 a month for the rest of your life, but you're going to have a $50,000 death benefit. So you die tomorrow, you only paid $11, but your beneficiaries, whoever you select, maybe mom and dad, a spouse, will receive $50,000. And people say, well, is this something I should really do? Does it make financial sense? And so I don't want to get too much into the weeds here, but I say if you had this policy for 46 years, and so you're 65 years old now, I think the example I did, the person was 19. You've paid $137 in premium times 46 years. So you've paid $6,300 in premium. $6,300 in premium, but you've got an actual cash value in your policy of $19,000. So if you quit paying premiums and decided, I just want to cash out, you'll get $19,000 back. Now, that isn't as good of an investment as if you were to invest in stocks, 401k plans. So this isn't a financial investing thing. But the point that I'm trying to bring up to you here is that to have a whole life insurance policy that's building some cash value when it's only costing you $10 or $11 a month isn't a bad idea. It isn't a bad idea to purchase it now. If I were to purchase this whole life policy, I'm 40. If I were to purchase that same policy today on me, I would probably pay closer to $80 or $90 a month for the same policy. So life insurance is never any cheaper than it is today for you, and it's something that I encourage people to consider. So that's what whole life looks like. It's typically more expensive. I'm going to stop this share, and I'm going to share one more. Let's see here. Here we go. Quote, and this is a quote for term life insurance. So term insurance is just what it sounds. I'm going to insure you for a set term. In this particular example, I quoted 30 years, but you can see down here in the table that we can look at what the premiums look like based on different lengths. And so at the end of 30 years, if you're 19 today, so at age 49, you will no longer have this life insurance policy. It will expire. But for the next 30 years, you will have coverage. In this particular case, I did $250,000 of death benefit, so 5 times greater than what we looked at on the whole life case. And the rate is $18 a month. The whole life case, we were looking at $11 a month. So you get a whole lot more coverage, but the reason you get a whole lot more coverage is because the insurance company is betting that you're going to get closer to life expectancy and that this policy is going to expire worthless. This policy, unlike the whole life policy, does not have any cash value inside of it. It doesn't build any kind of value for you. All you're doing is simply paying the monthly premiums, and hopefully you never have to use it. Term insurance is a very good insurance. I sell it quite frequently. And depending on a person's age, sometimes I'll sell them a little bit of whole life, and then I'll tack on top of it a term life policy. And then over the course of the years, we may add more term life coverage as somebody might get mortgages, other debt, business debt, and the like. And so we can play with that. Here, the rating. Rating is based upon your health. This is a super preferred, so this is somebody that isn't overweight, isn't on a lot of medicines, and doesn't have any pre-existing health conditions. A standard rate would be somebody that's maybe a little bit more overweight, maybe he's on a medicine or two, and so you can see the rate here. Down in the table, this table uses the standard rating, but what I just wanted to show you here was, hey, if I want this policy, this $250,000 policy, and I only want it for 5 years, my monthly premium is only $15 a month. But if I want this same policy, but I want to have it for a 30-year term, the insurance is going to be more expensive. It's going to be closer to $30 a month. And that's because you're getting closer to life expectancy. Certainly at 49, you're not at life expectancy, but the insurance company is taking a risk that as you get older, something may happen there. So that's kind of life insurance in a nutshell. I'm probably the worst life insurance salesman on the planet. I don't like carrying a lot of life insurance. I like covering just enough to take care of my debt and make sure my family isn't burdened with anything like that. But I also wouldn't be the type of life insurance salesman who would say you should have 6 or 10 times your income in a term policy. Because you need to have, you need to send all your kids to college, and you need to make sure your spouse is taking all these different kinds of things. Well, I think there's some merit in that. I just don't think, I think a person can finally become insurance poor. So a person should take a look at their risks and visit with their family and just come up with a product that makes sense for them.
Excellent, Tony. I know you've got to go, so I'm going to stop the recording of the session right here. So thanks, Tony.
Hey, very good. Thank you all.